I think that with the truce holding up still, even if on a shaky ground, the market sentiment towards the rupee should improve. We saw yesterday rupee fell to about 86. And I think that if oil prices go further down, it could go back to its previous range of 85, 85 and a half. Overall, I would say that the pressure on the rupee was not extraordinary from the recent geopolitical tensions, but of course, it was one of the underperformers in the region.
We've been tracking whether there was a need for the RBI and intervention. Of course, that would happen. I believe the key threshold is 87. Of course, we are well off that level right now. But in terms of any moves by the central bank there, what would it take for them to move? And is 87 the key number?
I would think so. I think 87 technically points to be a level where the Reserve Bank of India could intervene to stabilize the currency if exchange rate gets to that level. We also have to be mindful that currently the inflation situation in India, at least from a headline inflation perspective, is very benign. So that perhaps increases the tolerance threshold for imported inflation as far as a weaker currency is concerned. But I do think that 87, is a level around which the RBI might start intervening, if at all we see a depreciation of the rupee towards that level. Otherwise, I believe that the Reserve Bank of India's buying of FX reserves could remain intermittent and sporadic.
As we look at liquidity in India, the central bank on Tuesday conducted a 7-day variable rate reverse repo auction worth 1 trillion rupees, and that follows a review of the liquidity conditions. They also said that they're not going to be conducting a 14-day main operation, which was originally scheduled for Friday. How is the RBI doing in regulating liquidity?
I think the growing sense is that the Reserve Bank of India is not very comfortable with a very, very large liquidity surplus in the banking system, because the overnight call rate, the weighted average call rate, which is the operating target of the monetary policy, is substantially below the repo rate, towards the lower end of the policy rate corridor. I think with these actions, the Reserve Bank of India is trying to bring it closer to the repo rate, if not higher than that, of course. But I do think that some amount of liquidity surplus in the banking system will sustain, because that will be required for monetary policy transmission, especially after the outsized 50 basis point cut at the June meeting. So although, I do think with the recent actions, the Reserve Bank of India is conveying a message that the liquidity surplus will taper. But given the fundamental factors such as government spending, etc., we do think that it will remain in a decent surplus, if not large enough that we have seen in the recent weeks.